Hey, good evening, everyone. Brian Hoops from Midwest Market Solutions. This is our Market Insider TV WASD Supply and Demand Report. All right, it is January 12th. It's a Tuesday evening. Report has been out and about, and the markets have settled. We were limit up after this report in the corn market. Synthetics calling for a little bit higher in the overnight prices. I wouldn't be surprised to see the soybeans pull back here along with the wheat after this report has now been digested by the trade. From information during the day, follow us on Twitter at Midwest Markets, where we post a lot of different market information. Also, bookmark our website, MidwestMarketSolutions.com. We post a daily Market Insider TV segment at our website, Market Minute there, the very brief synopsis of what's happening in the markets. We also send out text message service to our clients. So love to have you become a client if you're not already. You can subscribe to some of our work as well. And we have branch offices all around the Midwest. Some of the branches send out different newsletters in addition to what I publish for Midwest Markets. Just look at our website. You can find phone numbers and addresses there on the site. So let's get into the report here. Won't take up a lot of your time, but let's take a look at what the report has to say. There's our offices around the Midwest, list of them. We do clear our trades through R.J. O'Brien, the most reputable and the oldest clearing firm of the CME. We were founded in 2002, so I've been in business since the 90s. And some of our brokers have been in much longer than I have and have a lot of wealth and experience. All right, here's the numbers, the snapshot, what came out here from the production from the USDA. This is the big thing here. The harvested acres were right in line with expectations, virtually no changes, but this yield from the USDA, 172 bushels per acre, down substantially from last month. Still above last year's numbers, but remember back in August, USDA said a 182 yield. So this is a major change from that 182, and it really has give us a tightening of our ending stocks. Soybean yields not that much different. It's down a half a bushel from last month, down slightly from trade estimates, but our production did drop ever so slightly. 35 million bushels in soybeans is all, versus corn production down a little over 320 million bushels from the previous report. As far as our ending stocks goes, this was another report that it was friendly, certainly. Soybean stocks, 140 million bushels, not anything we didn't expect. It is down from last month's by 35 million, so right in line with expectations. The wheat might have been a little bit more bullish than expected, 836 million, down from the average trade gas as well. This trade was looking for virtual minor changes. And corn was the surprise with the production numbers dropping like they did. Corn ending stocks at 1.552 billion bushels, well below the average trade gas, well down from last month by 150 million bushels. Now, the USDA did make some changes to their balance sheet in the corn that we'll look at to keep ending stocks at this 1.552 area, but there are a lot of questions if those numbers are accurate, and kind of the same thing in the soybeans. We'll look at class by class breakdown and take a look at all these numbers. On top of all the numbers that we had, this was kind of the granddaddy of them all. Ending stocks or quarterly stocks here for corn, well below the average trade gas. This is, I think, what really ignited the trade, is that we use more corn in the last quarter than what we had previously, and 11.3 billion bushels of it's right in line with last year's numbers, and well below the trade gas, as I mentioned. Soybeans, very close to the trade gas, also well below last year's. We have started off the course of the marketing year with huge demand, a lot of exports that have slowed but are still significant. And wheat's quarterly stocks 1.674, a little bit less than trade expected, and a bullish number overall. In addition, another piece of the puzzle here, world production numbers coming out. Brazilian corn at 109 million tons, soybeans at 133. That's less than last month for corn, right in line with expectations. A little bit more for soybeans, I think, than what the trade had guessed. I don't know if they've had such a terrible growing season in Brazil. It's mostly Argentina. That's the really bad spot. But look at compared to last year, corn production is more, soybean production is more in Brazil because they planted so many more acres. Argentina is where we can see the yields dropping compared to last year, corn is down. Compared to last year, soybeans is down. But this, I think, will be down even further uh, coming up here in the future. Last month, it's a 2 million metric ton drop, 1.5 for corn. And as I said, we're going to see probably more of these type of drops in the future. Okay, world ending stocks for corn and soybeans and wheat all close to the average trade guess, not major changes from last month. And they also have Chinese imports in here, pretty close to where the USDA was here recently. So let's get into the class by class breakdowns. As far as corn goes, we've talked about the yield reduction, 3.8 bushels per acre since the December report. And this is expected to be the final production number. USDA does make revisions throughout the year, but hopefully this is the final one. So production is down 320 million bushels. And where I alluded to that the USDA was making some changes on the balance sheets to kind of dress this up a little bit is here in the demand section. As we know, as prices rally, the job of the market is to slow demand down so we don't run out. And that's what the USDA is trying to anticipate in here. They have feed usage dropping by 50 million bushels. They have food, seed, and industrial use down 100 million bushels. That would include ethanol usage down by 100 million. And then they have exports. At one time, 2.650 billion, now down 100 million to 2.550. And I run the numbers each week on where we are shipping and what we need to average to reach the USDA forecast. I think they're certainly justified in lowering these exports just slightly. The ethanol use certainly justified as well, and I guess the question will be is the feed usage. They only dropped it 50 million bushels, but we'll look at this a little bit more. But that's the one that you probably could question if anything. So they have ending stocks down 150 million to 1.552. On my balance sheets that I run, these are all historical numbers from the USDA. My number is on the far right column. So we use the same yield the USDA did. We were a little bit pre-report larger than that, but we are going to use their number. So we get into this category in here where we're talking about total usage. I have usage a little bit larger than what the government has. I do think the exports fall down. That's certainly justified. I think ethanol certainly justified to bring this pace down, but I'm not convinced this quarter anyway. We're going to feed less animals or shift a lot of the demand over to wheat. I think a lot of the corn was locked in, and it's going to get fed regardless of where the price is going. So I have feed and residual a little bit stronger than what the government has, and as far as industrial usage, I still have it a little bit stronger as well. So I'm looking at any stocks are probably going to be closer to 100 million tighter than what the government has, and a stocks to use ratio 9.8%. You have to go back all the way back in here, 13 and 14, to find a stocks to use ratio of 9.4%. Even though ending stocks were tighter back then, the usage is far greater than what we had back in those years, and that has tightened up the stocks to use ratio. So I don't think we're into this category yet where we're going to start talking about under 100 billion bushels. I don't think there's anywhere close to that. But at this point, corn market being limit up and is not doing anything to not attract corn acres. I've talked with several producers, some pretty good sized producers that are looking at maybe adding corn acres if this corn market keeps going. Just doing the math, you can get a far greater yield and a better price than you can for planting soybeans. So, corn market doesn't really need to accelerate much higher. I think the soybeans do based off of their balance sheets. And let's look at them now. Yields down slightly, as we mentioned. That brings our production down only 35 million bushels. They have exports increasing by 30 million. I think that's certainly justified. They have crushings up 5 million, so a total of 35 million there. I think that's all certainly justified. And they did lower residual usage. I don't know if anybody really knows what residual is, but they did lower that. And that keeps the balance sheets looking a little bit more well supplied. Maybe that's the best way to say it. 140 million bushels of any stocks. We're going to look, I think we could make a case we're well less than that, but I did not expect the USDA to print anything sub 100 million. That's just out of the realm of possibility. But they did raise the ending stocks price, and I think that's justified. Here we go back and look at historical numbers and put these USDA numbers in context, where disagree a little bit with the USDA is this export category. I think we're a little bit stronger than this. We only have to average like million bushels each week through from now through August to reach the USDA forecast. Well, they jumped it up 30 million, so now we're looking at what, 7.5 million bushels. I haven't ran the numbers yet, but it didn't change that much. Even if we have to export 8 to 10, that would fall into this category here of 2.25 billion bushels of exports. I think that certainly justified the crush number. I would certainly expect that also to be kind of in this range here. Crush has been record large. They're already anticipating a large crush, so maybe we don't increase that. But that is one category that could be increased, and thus I have any stock or usage at least 30 million bushels more than the USDA does, based off of this category here. They lowered residual. Like I said, nobody really knows what they're doing there. But I have any stocks tighter than what the USDA does by a fairly significant amount. So, maybe it's close to 100 if you want to split the difference. I think these numbers are tighter than what the USDA says. Nonetheless, they have ending stocks to use ratio at 3%. We're closer to 2. But if you go back in history, only one time here have we been this tight as far as stocks to use. 3.1%. In 2013 and 14, USDA said 2.7%. That is under 100 million bushel carryout and a stocks to use ratio of 3%. This is, I think an exceedingly bullish situation for soybeans. I don't think we're toppy yet. I've heard from clients tell me that some analysts were talking before the report, things were getting toppy. And I think if you look at these fundamentals, there's no evidence that we are getting anywhere close to topping action in the soybeans. And I put this chart on the last webinar I did, and it's still worth looking at. Back in 2003, we had an inverted market just like we did this year. And in that year, the market was clearly telling you to sell all the soybeans you can at harvest and then re-own with deferred contracts. And this is a chart of a deferred contract July of soybeans of 2004. And so you can see at harvest, prices similar to this year moved higher all the way through December into January. So we're right here at this point in time in 2004. Prices have moved off of their lows by $2.50, which sounds familiar. But look at where they went in February, March, and April. We continued to trek higher. It wasn't until early April that we actually had a peak here, almost double top on the charts. A market dropped and then a secondary rally in May. And this coincides with our spring planting. I believe we do need to rally soybeans at least until March planting report and into early April when farmers are planting corn to buy as many soybean acres as we can, whether that comes out of corn, whether it comes from cotton, winter wheat, spring wheat, whatever. We need to be planting more acres, and I don't think there's a top coming until we get into this March-April time frame. And even then, we saw a little secondary rally after the stocks report in June. But nonetheless, the top was made here in early April of that year. Winter wheat seedings, and this is important for corn and soybean producers, so don't turn this off yet if you don't plant wheat. This can impact the corn and soybean markets. Actual acreage came in a little bit above expectations at 1.5 million more than a year ago. The balance sheet had very minor changes. Feed usage 25 million increase, domestic usage up 26. So total ending stocks down 36 million. Certainly justified if we're going to feed a little bit less corn, you feed more wheat. That makes sense, although I don't think we're at that point yet where producers have rationed their feed cost away. I'm pretty much in line with what the USDA says as far as carryout. We still have a huge stocks to use ratio, so it's not a super bull market, but we did have a bullish reaction. Here's what I wanted to look at, is you look at where did all the winter wheat states add acres. In the hard red wheat states, look at Kansas. That's a huge amount of acres, a 672,000 increase. I think this is very vulnerable, as well as Oklahoma, North Dakota, 100,000, South Dakota. All of these are vulnerable to switching out of these wheat into soybeans, given price and given conditions in a couple months. So let's keep an eye on that. I'm about out of time here, so I want to wish you thanks for participating in this webinar, and give us a call if you have any questions going forward. Brian Hoops from Midwest Markets. Love to talk with you. Thanks for your time and attention today. We'll hopefully talk to you soon.